The cryptocurrency market has seen some massive volatility over the past 24 hours. In today's video, we are diving deep into the high time frame and short-term charts, discussing exactly what is happening and likely to occur. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Bitcoin and the broader cryptocurrency market have seen an incredibly volatile 24 hours with a massive correction to 89,000, followed by an equally massive rally back up to 94k. In today's video, we are going to be discussing the economic news, recent news releases which have contributed to this rally, the short-term volatility and price action, the high time frame charts and key levels, as well as the next potential moves for Bitcoin. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you'll be interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our private community with over 700 members, you can go ahead and click the pinned comment of the free channel by clicking my name or these two links for more information. The second link being a 10+ minute video showing you inside our private community, showing you the main VIP channel and the group chat and exactly what you'll get access to. Go ahead and check that out. It takes a few moments, and let's jump into the video. So taking a look at the recent daily counter here, what an absolutely insane daily candle. Now this is probably one of the most crazy daily candles we've seen for a while for Bitcoin, because if we look at it, it is essentially a doji candle, right? The candle body is very, very small, indicating that during this 24-hour period, we have seen a whole heap of volatility. The price action has essentially come back to where it started that 24-hour period. This daily candle is closing in 2 minutes time. If we move over to the weekly chart, we can see the weekly candle is also looking relatively decent. We talked in our prior video that yesterday's weekly candle close was not, again, a bullish close, but it wasn't a bearish close. Again, for us to see a bearish weekly close, we do need to see that weekly price drop below the prior opening price of that green candle. That, of course, would be a bearish engulfing close, and we would likely see a continuation toward the downside. We are still sitting above this region now on the weekly price action. If we move over to the hourly charts, we can see the extent of this volatility, with Bitcoin dropping below that $92.5 to $92,000 region, resulting in a correction directly into our next level of support at that $89,000 area. Since then, we have seen a fantastic rally over the past few hours of Bitcoin, of course overnight in Australian time, resulting in a move back up to our next level of liquidity, that prior high at around 94.8 to 94,000, an area we were currently retesting with the POC lies, and we have the downtrend confluence of the overall trend since the rejection at 102.5. We'll come back and discuss this in a second. Moving over to the market data, we can see this volatility has really caused a whole heap of liquidations, 819 million in liquidations. Absolutely mind-blowing stuff. 592 million in liquidations from longs and 226 million from shorts. With the increase of 512% over 24-hour period, volume has as well increased by 213% at 335 billion. Moving over to the DXY is not doing all that much. Of course, we do know interest rate data is still expected to be on the bearish side, as the Federal Reserve is still taking a pretty hard move towards really wanting to drop inflation. We know that attacking inflation and trying to bring inflation down is almost contradictory to what would occur if we saw interest rates fall. Because we know that excessive dropping of interest rates over a long period of time, naturally, the natural consequence of that is going to, of course, be that the dollar weakens and inflation starts to increase. So the Federal Reserve can't attack inflation and try to bring inflation down while dropping interest rates, and that is why we have this uncertainty in the market. And when we have uncertainty, the dollar rises and assets fall, and that is exactly why we have seen the dollar continue toward the upside, and exactly why we have seen the S&P 500 and our Bitcoin and cryptocurrency markets drop toward the downside. Now, that uncertainty will likely be cleared up as we move into that next interest rate release in 15 days' time. At the moment, 97.3% are expecting a pause, meaning the pause is most likely priced in. If we do see an interest rate drop, that is going to result in a very strong bullish rally toward the upside again. And if we do see that interest rate pause, it is going to be more speculative as to how we react on the short term. And again, much more dependent on the Federal Reserve press conference and the overall narrative pushed in that press conference preceding the interest rate release. Moving over to the S&P 500, not too much happening here. Again, guys, the S&P 500 is not looking fantastic on the higher time frame. If you have been following our channel for a long time now, some of you are new here. Again, our channel has grown a fair bit in the last 2 years. If you are, a long-time subscriber, you would know that I turned bullish on the S&P 500 all the way back in around March, April, May, June of 2023, and I was calling for $6,000, and I essentially turned bearish on the short term at a $6,000 target when we saw that deviation from that $6,000 high, and I'll remain bearish on the short term until two things occur. Number one, we reach our next level of support at 5,700, or number two, we are able to break back above this region, clear 6.1K, and that is when I expect continuations. Until then, I am cautiously optimistic, but I am more sitting on the fence waiting for that uncertainty surrounding monetary policy, which drives again investment to clear up a little bit. Let's go ahead and jump over to our topics today. We're going to be taking a look at exactly what is happening here, discussing what this recent volatility means for the price action, where Bitcoin is likely to go, and how this has affected the high time frame and short time frame charts. We are also going to be taking a look at the total market cap because a very interesting retest has occurred, as well as taking a look at Bitcoin dominance as we are now retesting a downtrend for Bitcoin dominance. Again, very important. And finally, again, finishing up on the higher time frame charts as that daily candle has just closed, an insane doji candle, as we can see printed right here. So before we get into any of that, go ahead and hit that like button, guys. Show some support to the channel. It does help the algorithm. And go ahead and sign up to BitGet, BitUnix, or BingX with the links down below. That will go ahead and support me, but most importantly, it will support you in your trading journey with a lifetime trading fee discount of 15%. That can build up to 45% on all your trading fees. Go ahead and use those links. It takes literally 5 seconds. All you need is the email address and a password, and bang, you have an account. Check it out. We'll jump back into the video in just a moment. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, I want to go ahead and start on the total market cap. Now, the total market cap, as I've said many times, is simply a representation of the entirety of cryptocurrency as a whole. When the total market cap is looking good, it is more likely than not the entirety of the cryptocurrency market is going to continue toward the upside, and vice versa. So as we can see, the total market cap has retested a very important level, and this level is going to be, if we zoom in very, very close over here on that recent daily drop, this level is going to be the $3.02 trillion level. It is retesting. It has come very, very close to retest that 2021 high at 3.01 trillion. Very close. This is a fantastic thing. We have been able to at least sustain above this region now for another week, another day. And again, while we sustain above this prior 2021 high, we are more or less sitting towards or leaning towards us following that 2021 cycle, provided the monetary policy that has been causing uncertainty and downward pressure fades. Remember, if the monetary policy that has been causing that uncertainty leans steeper into reduction of inflation, it is likely risk assets will continue to suffer. That is an objective fact, and that is not something we're trying to dismiss. That is there, that is present, but it hasn't happened yet. We need to see how Federal Reserve actually goes ahead and responds to their statements and their claims they made in the prior meeting. Their overall statement and claim was they were looking to only reduce twice in 2025 instead of 5 times. Doing so and saying that immediately changes the perceived systematic risk in the market and forces asset prices down. Now, if they backtrack on that and they go back to 5, the market will continue upwards. If they move into an initial interest rate reduction in this interest rate period, the market will continue upwards. But if they lean heavily into bringing inflation down and they move towards lesser or even fewer interest rate reductions, well, then we are likely going to see more blood on the macro scale. And this is mainly the reason we have seen such consolidation for Bitcoin. If we look at the price action, right, and we just zoom out, this has simply been 2 to 3 months now of just sideways price action along a major level of demand. And I've said already, it is unlikely we see deviation massively towards the upside or massively toward the downside until either these levels are broken, of course, but what would trigger those levels to break would, of course, be the sentiment shift, which is driven mainly through economic policy. Now, as we know, supports and resistances are made up of real people, buyers and sellers, so for these supports to break, there needs to be a shift in sentiment in the market, and the buyers who are initially buying here need to either not buy or begin to sell at these levels of demand. So again, for that dramatic change to happen in the market, we need to see a sentiment shift. Things don't randomly happen. There are causes and effects in the market. Moving back to the total, because I want to go back to this point, the total is retesting a very important level. And I mentioned in our prior videos that if the total market cap breaks below the 2021 high, it is very likely that it will be marked as deviation, and if we see deviation from a range high, the probabilities are then in favor of continuations downwards. How steep or how low we will go, that's another question, but the probabilities are in favor of continuations down. Now, while we remain above this level of support, because it is now a support, support is support until it is not, and therefore we need to be aware that there are potentials for reversals and bounces back toward the upside while we come closer and closer to this major level of demand, okay? That is very important. The next most important thing is that while we hold above this level, we do have some similarities with that 2021 cycle, of course, seeing a breakout followed by a major rejection into that 2018 high, followed then by a continuation for the rest of the year. This is a potential as well, but it is only a potential while we remain above the 2021 high, and if we drop below the 2021 high, well then this potential pattern we are seeing is no longer going to play out, and we will thus see a continuation downward. So that is why the total is important, and the total is retesting now a very important level. And we've said already, for the total to break below that 2021 high, we are going to need to see Bitcoin drop below that 86,000 level. Now, if we take a look at 86,000 is essentially the last level of support. If we go back to that weekly chart or the daily chart, The last level of support within this higher time frame range, we have this major liquidation, or should I say demand zone over here, this liquidity zone sitting between the prices of 88,000 and 92,000, an area of which we actually came back down and tested. But we do have one more level of support, and that is sitting at the $86,000 region. We'll go ahead and draw a horizontal line over here. And we know it's support because we can see that upon the breakdown of 86,000, the VRPV significantly drops off. Now we have some minor supports around $76,000, this cluster over here. We also have support sitting around $71,000 on the way down, and of course 68 to 66,000. These are critical areas of support. So we know that if we drop below 86K, all these levels become open for movement. Until that happens, it is unlikely we see any movements. It is more likely we just consolidate sideways and then continue upwards, or if the interest rate data comes out bad and the future projections of monetary policy remain bearish, then downwards. But until we see that breakdown, it is unlikely the total is going to break toward the downside, and therefore the macro charts remain cautiously optimistic. Now, if you are turning bullish for the first time at these highs, it is nothing. You are just simply late. It doesn't mean you're going to be wrong, but you are simply late. Again, if you've been following the channel, we turn bullish at 18 to 16.5K. We turned bearish at 64K at the top of the last cycle. When we turned bearish, everyone told me I was wrong. I actually lost 500 subscribers for being bearish. At that time, I ended up buying at 18 to 16.5K. We accumulated for months. We were telling people it looked like accumulation. It looked like the bears are exhausting. We had falling wedge structures. We had indications over there from momentum. That momentum was starting to develop, and we were expecting macro continuations from the bottom. We ended up buying, and we ended up going all cash at 106.5. The reason we went all cash is the same reason we bought. When we bought, there was speculation around, again, potential interest rate pauses. When we see sentiment shift, the market perceives that as, again, bullish or bearish. When we see potential sentiment shifts to interest rate pauses after interest rates have been rising, that is perceived as bullish. When we see sentiment shifts to potential interest rate pauses after interest rates have been falling, that is perceived as bearish. So simply those economic policy shifts, or those, again, the perception of those shifts have been enough to really guide my macro decisions in terms of how I position myself on a macro scale. Again, when we're looking at macro price action, we have to take into fact macroeconomic events. So again, that's what I've done personally, but I'm not going to sit here and say I'm perma bearish, I'm macro bearish, because I'm simply not. I am waiting. I am cautiously optimistic. I'm watching how that data develops, but I'm watching from the sideline. I'm simply trading on the meantime. And if everything turns back bullish, I will be back in. If everything drops back down, well, that is it. I'm lucky I am in cash. So looking at the price action here, guys, like we said, for Bitcoin to continue lower, we need to drop below these levels of support. Until then, the most likely scenario is that we just continue to chop and continue to chop. And this is a critical area of demand. I would not be high time frame bearish unless this level breaks. If we drop below here, I would then expect continuation. But while we sit above support, support is support until it is not. And the perception of even interest rate reductions moving into 2025 being reduced from 5 to 2 has not been enough to break the price action below this support. This is some degree of a good sign. Let's move over to the short-term price action. So we've seen a lot of volatility for Bitcoin. I guess a lot of people are now, asking a question. A lot of people were saying the bear market was here yesterday, and now people are saying we're back, right? We go from one extreme to the next extreme within a matter of moments in crypto, and that's why I love this space, right? It's just crazy. But a lot of people ask, is this marking the bottom? Is this the bottom for Bitcoin? And again, policy stipulates demand. So it's very hard to say for sure because a lot does rest on the developments surrounding the monetary policy, and that is really going to determine the macro outlook for Bitcoin. But we can talk about the short-term price action, right? The short-term price action was obviously clear that 89,000 was tapped, a major liquidity level. We have seen a massive reversal, and now we are retesting a pretty important level of confluence. This level of confluence is going to be the POC, the prior liquidity level. If we look at the price action over the weekend, right, we had this massive amount of chop over here. Okay, we've retested. We're basically back in that chop range. This is a massive deviation toward the downside, and we are coming close to retesting our overall downtrend. So I would not be looking at this price action right now and aping into positions. I'd be watching for breakouts, for continuations, or I'd be watching for coins that have retraced massively and have hit high time frame supports where the risk return is in favor of continuations with tight between validations. That is what I personally be doing. But as for the short-term price action, I'm watching for the 200 moving average. I'm watching for this liquidity zone. I'm watching for that downtrend. I'm watching for a break above these regions to then say, well, I look like this price action is going to continue. And then our targets, of course, are 97. We're looking at 100,000 if that does occur. And if not, we could see the price action drop back down. So let's take a look at that. If we go down to a 5-minute chart, we can see already over here, we're starting to see a lot of negative momentum shifts occur. Now, of course, we need to see trend structure strength to validate these moves. If we go down to even a smaller time frame, we can see right over here that we had this massive rally toward the upside. If we look at the price action here, I would not like to see Bitcoin drop below these lows at 94K. If we drop below 94K, we are going to be dropping below the 200 moving average, and it is likely we are going to retrace a significant proportion of this upward move. Now, I don't think we're going to retrace all the way down, but at least over the last couple hours, we could come back down to 93.2. We could come back down to these levels over here, 93,000 on the dot. And worst case scenario, I think for Bitcoin, we could even come back down to retest. We're looking at around 92.6. So there is a potential for a correction and reversal here, but we have to play it by ear, guys. Thank you for tuning in. Sorry I couldn't provide more information. Again, the volatility has really shaken out the price action and it is still fresh. And overall, if we just eliminate that deviation towards that low, we have just basically been moving sideways. And again, that has been validated by the fact that we have this massive doji candle on the daily chart, which is simply just a representation that literally nothing happened, nothing meaningful happened, indecision is still going, and that is the price action. The last 4 daily candles have been, look at this, massive wicks, but very small bodies. So indecision, uncertainty, and that is likely going to continue. Thanks for tuning in. Catch you guys in the next one.